Let's get your home loan rate down. We understand how important managing cash flow is for investors. That's why talking to one of our brokers can help you find the best loan options and a better rate. Your Finny loan expert will assess your loan and quickly spot a better option if it's out there. With access to over 70 lenders and a wide range of products, you're sure to get the lowest available rate in the market. Stop worrying about your repayments now and take charge of your financial freedom. Contact a Finny mortgage specialist today on 02 8866 2444 or visit our website at www.finny.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello everyone, Grace Ormsby here. Welcome back to a brand new episode of the Smart Property Investment Show, and Happy New Year. Can you believe we've hit 2024 now? I hope wherever you are across the country, across the world, you are enjoying a well-deserved break. As I think I've said before, the world of property stops for no one. We're continuing to give you podcasts. I hope you've got a little bit more time to listen to them actually at this time of the year. It is an absolute pleasure to once again be chatting with Finny Mortgages, Eva Lewisance. Eva,
hey.
Happy New Year.
Happy New Year. I can't believe it's already Jan and Christmas gone and yeah, we're back at it already.
The year just raced by, and I do feel like we've obviously got plenty of opportunity today to be chatting about what is to come in 2024, but you can't really look at what's to come if you don't really know what's just happened. So it feels like quite a good time for us to take stock, to reflect back on the year that was. And you noticed a few trends that did kind of appear over the year that was 2023. And they seem to shape the year ahead too.
Yeah, that's right. So for the first, 6 months of the year, we could see that lending was getting harder and harder, obviously rates going up, and a lot of things happened in the lending space that made it harder for people to borrow money. But as things progressed through the year, we actually saw quite a few changes that made it easier. And it looks like it is the trend that will continue in 2024. And I think that's quite interesting to discuss based on what happened last year, what we would expect and hope to see this year.
I mean, speaking of what we hope to see, obviously the last year we've seen so many interest rate rises over pretty much month to month. We knew to anticipate another rate rise. Are you expecting a similar environment in the year ahead?
Hopefully not. Hopefully not.
It's obviously crystal ball gazing.
Yeah. Look, it looks like we're at the top, and if there is one more rise, well, it might be one, but that would be it. And I think that's the opinion of a lot of experts in this area. So hopefully we won't see any more rises and even hope for any or some decrease by the second half of the year. That's my wish. That's a great news wish.
I mean, I wish we could make it actually a New Year's resolution, but I don't think that's how New Year's resolutions really work.
That's not going to fly. No, that's not going to fly. But look, from last year, what we've seen is with all the rises that people actually lost up to 30% worth of the capacity to borrow money, even though that wasn't anticipated to be that way. That plus the bank, tightening up how much they would lend, and changes also in the living expenses of people have made that, if you could borrow $1 million last year or 2022, now you can borrow 700 pretty much. A huge difference in what people could do.
And so will that factor through to this year as well, or are some of the other things that we're going to be talking about really changing that scene? You've even mentioned that, the banks have probably relaxed a little bit more now. Is that because we've probably got to that ceiling of the rate rises?
Yeah, I think so. And the fact is that obviously people have less money to spend on discretionary expenses. So even though the bank were assisting, let's say a couple with two kids at $5,000 a month in general living expenses, they might actually spend quite a bit less than that. And because they don't have extra cash to spend. So I think that's something we can look forward to, that the bank might be actually taking into consideration that people are not spending as much as they are supposed to and being more careful with the money. And then also we saw a change into how they assess people's living expenses that made it harder. Is that, for example, it used to be, if you're a couple with two kids, you spend that much money and that's it. But now some of the expenses are added on top because it's, life choice. For example, if you go and send your kids to private school, or if you live in a unit and you pay strata on top, these sort of things are on top. So it made a big difference because it could be like $500, $600, $700 a month added onto your expenses, and that makes your deal and your application fail. So hopefully things change in that sense, and it's easier to get lending, as well as the rate going down and capacity increases. So that's my number one wish for the year, that lending gets easier and people can either get into their first property or buy their next investment property.
So that's just one of the changes that we've really seen, I guess, gain traction over the last 12 months, Eva. But in your capacity, working as a mortgage broker and talking with people day in, day out, I'm sure it's not the only trend that you're seeing in the space at this point in time.
No, and we spoke actually about that a little bit with Phil, and in previous podcasts is we had this, I guess it's a bit of a jargon, but this mortgage prison or prison jail that people were in. And that was a real thing. People having debts that technically they can't afford. So they couldn't move anywhere. They couldn't get a better rate. They just had to stay with their bank and really couldn't help themselves. That was the first half of the year. And then we saw the 1% easy refinance option coming through. And then it was around July. So one bank did that, and then another one, and another one. And now almost, I think, 6 or 7 banks or lenders are doing that. And it's a lot easier for people, obviously, when they pay, let's say, 6% on the interest rate. They only assess with 1% buffer instead of 3% buffer. So it makes it a lot easier for them to service or to tick, the box from the bank that says, yes, they can afford their debt. So a lot of people, thanks to that, were able to move or maybe get a better deal, reset the clock to interest only. So that helped with cash flow. And that was available for owner-occupier at first, and now it's available for investors. And we also saw that becoming available for purchases and not just refinancing. So lenders definitely want people to keep going and keep buying. And that saved a lot of, I think, investors from having to sell when they couldn't afford anymore. Yeah.
It's obviously one of those things as well that's kept the property market stable, just the flow and effect of not having as many distressed sales as maybe people were expecting earlier on in the year to take place.
Yeah, I was actually expecting to see a lot of our clients coming back and say, look, I have to sell this, or what do I do? But we didn't have to, because we could refinance them, go back to interest only, help their cash flow. And I think we didn't see the drama that we were expecting. And of course, some people are struggling and had to sell their house. Obviously, the rates rises was huge and hurtful, but definitely not as much as we were told would happen, I guess. Yeah.
So do you think over the new year we can expect this 1% assessment rate to be continued to be used? I feel like it's really at the crux of it is that all these lenders are competing for business and they want people on their books. So I'm sure they're not going to take this away.
That's right. No, I don't think so. I think that's something that will continue. And actually, I'm thinking instead of having, the blanket 3% for all banks, and that was actually a requirement from APRA, I'm hoping APRA will actually relax this a little bit, and banks might just apply a 2% buffer, or even if it's 2.5, just a little bit less across the board. And that would help. That would help lending for sure. I find that 3% now, it's very unlikely that rates would go up another 3%. So it's assessing people these days on almost 10%, which is huge, crazy.
Yeah.
So yeah, I can see that. What I'm hoping to see, I should say, that this would become a thing across the board, that the rates would be lower, the buffer rate would be lower than 3%. Yeah.
There you go. Another 2024 wish for you there, Eva.
Yes.
I don't think you're asking for too much.
No,
I think it's all quite
so.
reasonable.
Yeah.
Don't go away. We're going to take a quick break. We'll be back in just a moment with more from Eva Lewis-Arntz. Welcome back to this very special episode of the Smart Property Investment Show. Happy New Year, wherever you are listening from. I hope the beginning of your year has been a wonderful one. You've taken some time out, got to relax and reset with family and friends, and we've got a massive year ahead. But as I said before, you can't really know what's going on in the year ahead if you don't take stock of what happened the year prior. So I'm here with Eva. We're looking at some of the trends that came into play in the finance space over 2023 and what they might mean moving forward. Eva, we've talked through a couple of trends so far. What else have you seen in the finance space over the last 12 months?
Yeah, so another thing that came through towards the end of the year is Westpac releasing 100% loan for commercial purchase, which we haven't seen in, I can't tell you how long, like it would be over 10, 15 years, like borrowing 100% of the property purchase price is insane. So that made a lot of noise, and it's only Westpac doing it. So what that means is technically someone going to buy a commercial property for, let's say, 700,000 can borrow 700,000. There's no need for a deposit, which is in these days, like it's a bit crazy, and it sounded amazing. The only issue with that is it was very much a product for self-employed people. And definitely not for the, sort of passive investor that were just going to look to buy a property and forget about it. It's very much based on servicing the debts through your business. So that was super exciting, but at the same time, a little bit restrictive to who can do this. So that in some ways, that just shows that the bank are hungry for business and want to help people to keep buying and investing. So another wish I guess I have for the year is to see more of those high lending, less, strict requirements for people looking to buy properties. And that was a big thing happening. I don't know if many people could enjoy those loans and those options, but definitely a big announcement to say you don't need any more money to buy a property.
Yeah, wow.
Yeah.
And it would be interesting if we did see this, I guess, transcend just being a commercial loan. It obviously shows there's, I'm not going to say a risk appetite, but an appetite for more lending to be taking place. And I guess it could open not the floodgates, but a few more banks might take stock. And as you said, if we're moving into a little bit more of a stable environment when it comes to rates in the next 12 months, it could be an interesting play.
Yeah, it could be. They also did at the same time released a $500,000 business loan that would be completely unsecured. So no property needed. You just could borrow $500,000 for your business. There's definitely a will to lend money to self-employed to grow their businesses. So that's going to be very interesting this year to see if any other lender or banks follow through and come to the party on this as well.
Have you seen anyone come to you with the intention of potentially setting up a business to take advantage of any of these offers that are out there? Or is it really just targeting the people who are already, self-employed or looking to expand their business?
Yeah, no, it's very much for the existing self-employed. You would still need, it's not a low doc type of loan. You still would need to show at least 1 year's worth of your financial. You still need to make sure you service. So it's definitely not something, all right, I'm just going to set up a business, become self-employed, and I can access this. So it's not an easy product to get through, and it was a little bit restrictive. That's why I'm hoping that will open up as well. But it was a really good start from Westpac with that for sure.
100% is quite a high hurdle, I want to say, for banks to decide that that's an okay thing to be doing. But one other thing, and we actually touched on it in a recent conversation as well, is that 95% loans are becoming a bigger thing.
Yeah, so that's on the same, path is another big four. So this is actually CBA reopened lending for investors up to 95%. And that was previously not possible at all. You would just go 88% plus lender's mortgage insurance. And if you wanted 95, there were some options, but with second and third tier lender, very expensive to get those. So again, CBA doing this at the end of 2023. is saying, we're hungry for business. We want investors to keep buying properties. We are making it easier. You don't need as much cash or as much equity from another property. And I'm thinking a lot of other banks might come to the party this year as well with that, because there is definitely a market for this.
A 95% lending party. I like it. I mean, it is one of those things where there has very much been an acknowledgement. There was very much an acknowledgement over 2023 that housing was becoming increasingly unaffordable. And it feels like there's that real recognition that maybe the old school 20% deposit way of doing things is just not feasible in today's market.
No, look, it's really rare that I do 80% lending, to be honest. A lot of people have equity in the property, so technically they would get that as a deposit, but technically they actually borrow 100% by doing this, or they would actually use LMI. And I've said that before, but LMI is not something people should try to avoid at all costs. It can get you in the property market a lot quicker and sometimes years ahead than if you had to save 20%. And really the cost of it is, it's capitalized. If it's an investment, it's tax deductible. So it's not actually the huge cost people make of it. It's not. So don't try to avoid it at all costs. Actually, I would say get it and get the property now. Next year, your property is probably going to be worth so much more than just the LMI amount. So definitely worth paying. Yeah, definitely worth it.
Well, there you go. For anyone whose New Year's resolution is to buy a property in 2024, it's worth checking out all the options that are available, because I don't want to say it's ever been easier, because it's clear it's not an easy property market by any stretch of the imagination. But people like Eva are going to be your best friend if you're navigating that process this year. We're going to take a quick break. See you on the other side. Welcome back to this episode of the Smart Property Investment Show, coming to you in 2024. Happy New Year. I hope the start of your year has been amazing, and it's going to be a pretty crazy 12 months ahead of us. It is an absolute pleasure to be chatting with Eva Louissance, who's giving us a rundown of what happened in 2023, because that is giving us a really good insight into what we can expect in the finance space across the next 12 months. And Eva, I believe you've got one more trend that you want to be sharing with us today.
Yeah, so we spoke a lot about what happened for investors and self-employed, but I think what happened a lot in 2023 is for first-home buyer, and how the government is trying to help people to get in. There's so many schemes and grants and options out there, and it's quite complicated because there's actually so many available. And I find people, when I speak to first-home buyer, they just have no idea what's available to them. And that's the big thing. So I just want to, mention that, because it's very much possible now for people to get into the property market with as little as 5% deposit. So it's not very much. Most people on the average income can do it, and probably can do it within a year or two and get into it. So there's one that's going to be, I think, quite big in 2024, which is the share equity scheme. So that means you only have to put 5% deposit against the property. The government will put up to 25% of the property price as a deposit for you. So they're not giving you the money. You'll have to pay it back eventually, but that gives you basically a loan that would be at 70% LVR. So you don't have to pay lender's mortgage insurance as well. So for the people that are like, I need my 20% deposit, well, here it is. The government will give it to you, no LMI. And obviously, you'll have to pay it back, but we've got time to do this. And on top of that, there is no stamp duty depending on the property value, or you might get a concession. So technically, you just need your 5%. You don't even need to think about the stamp duty, LMI, and all those costs associated. The government will cover that. So that's one of the big one, I think, we'll see in 2024. There's still going to be also the Super Saver scheme, which allowed people to have like a tax deduction of their salary and put into super. So they pay no tax on their saving, and they could release it later to buy a property. I think that was a good option. I don't know if people have used it too well and maximize it, but I think that's a really good way to get into it as well. And it's still going to be as well the 2 to 5% first home guarantee, where people can only, just come up if you're a single person or low income, you only need 2%. That's still doable. That's still very much doable. And some banks are partners to this and basically waive the LMI for you. So I find there's a lot there that is available to people. On top of that, you might be able to get, depending what state you're in, $10,000 to $30,000 as grant, just money literally given to you to help you to buy the property. So I
Just
feel like
flying
there's no
around.
excuse. There's no excuse. It's available. I think the issue is people don't know about it. So chat to a broker. Go on the government website to check what's available to you if you are eligible. But technically, if you haven't had a property in the past and you're an Australian citizen, you can get those. So I find there's a lot there. It's a lot there to allow people to buy their first property.
It's making me think back, Eva, actually to a conversation I had with Phil probably 12 to 18 months ago now. And it was when everyone was kind of wondering if the property price gains had become unsustainable, where property would be going to next. There was all the concern around rate rises and what was going on. And we sort of sat back and went, the government is so supportive of people getting into their own homes. There is no way they can ever, they're going to come in and support it if the floor ever seems to fall out. But it never happened, but it just does go to show how much the government values home ownership and property ownership, and they're continuing to make these paths possible, even as housing affordability becomes harder and harder.
Yeah, no, it's I find that amazing. To me, it's like they're begging people to actually keep buying property. I was actually chatting to friends from Europe as well, where I'm from, and they were just like in disbelief when I told them what's available, and they're like, yeah, completely in awe of what's happening here and how we just get paid to buy a property basically.
Yeah, it's there to take advantage of.
So it would be a shame, and I find people just don't know what they can do. But talk to us, talk to a broker. We can tell you, okay, your borrowing capacity is this. You've got that much savings. Well, you can technically buy a property for, 500, 600, 700,000. In Sydney, that still gets you in a unit, one or two better. It's still great to get in. So yeah, definitely a lot available. And I'm hoping in 2024 that we'll see actually a lot of first home buyer getting into the market.
Another 2024 wish from you,
Yes.
Eva.
Lots of them.
Is there anything else that you are hoping for in the next 12 months or expecting, or business as usual for you guys?
Yeah, look, I don't think we'll see a lot of, release of how strict the banks are to check everything. But I'm actually hoping another one, that the banks stop asking for so many documents and so many checks on people's living expenses and how many coffees you drink. And, it's becoming a little bit too far. I think it's going to be too far. And in some ways it did help for people that bought property 2 years ago. And that's probably why we haven't seen so many distressed sell, is because it was actually that strict that people that did get mortgages were actually completely able to repay it even on a much higher rate. I find that now it's gone too far when you are assessed on 10% and you have to also cover that you can afford your coffees and your breaks, cigarette breaks or your lunch every Saturday, whatever it might be. It's going to be too far.
Mm-hmm.
So I'm thinking that we'll hopefully get a bit more lenient. And I'm also hoping that, again, for investors, that we can hopefully go up to 95% with most lenders, and that will give them a lot of opportunities to keep buying properties and build portfolios. So, yeah, I'm hoping to see that.
Less paperwork and more lending. I love to hear it.
Yes.
Sounds like it's going to be a great 12 months. Eva, thank you so much for taking some time out of your break.
No, thank you.
To share and enlighten us on what to expect for the year ahead and using what we know already from the year that's just been. So I really appreciate it. And as always, it's been a pleasure to chat with you.
No, thank you. It was an exciting year. It's an exciting year ahead. So let's see what happens.
Here's to 2024. To everyone who is listening along, we hope you have enjoyed today's episode. Any questions, editor@smartpropertyinvestment.com.au. Check us out on social media, Facebook, Twitter, LinkedIn, Instagram. And as always, subscribe to all the latest at our website, smartpropertyinvestment.com.au. Until next episode, stay safe and well wherever you're listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Do you need help planning your next event? With over 15 years of experience, Captivate Events is the expert in event planning. Our dedicated team ensures every detail is meticulously handled. Whether it's a gala dinner, exhibition, conference or study tour, we've got you covered. We'll be there every step of the way, from conceptualisation to flawless execution, to ensure your event is a seamless experience, minimising the time and stress involved in planning. Make your next event one to remember. Visit www.captivateevents.com.au or call 02 88 66 2440 and find out how we can captivate your audience.